So you want to know how you can reach a savings rate of 60%. Well, today in this video, we are going to discuss how that is possible and how you can get there in just 1 year. If you want to reach a savings rate of 60% or more, then you are going to have to diligently take a look at everything in your financial life. You might have to reduce your expenses. You might have to figure out a way to increase your income, but it is possible. Many people have done it. And if you're watching this, then it's probably possible for you if you make a few changes to your life. What I'm going to do in this video is I'm going to take an example person or an example family, and I'm going to figure out how they can save 60% of their income in 1 year. So right now, as I make this, it is January 2020, and our goal is to get to a 60% savings rate in just 1 year. And this is very important because a high savings rate is going to allow you to get to financial independence, and it's going to allow you to build up your wealth a lot faster than if you were to take a lot slower approach to saving your money and investing it. And that's a very important point. When I talk about savings rate, what I really mean is how much percentage of their income they are putting towards investments, not just saving money and storing it in a savings account, but actually investing it. How they invest it, I'm not going to talk about, but actually investing their money. That is what is important for growing long-term wealth. So I'm going to assume that this couple takes home $50,000 per year, and that's take home. So that is net pay. That is after taxes, that is after deductions. So both of them combined, it's going to take about $50,000 home. They have to save 60% of that. There's no way they're going to just be able to change their life upside down and save 60% of it, starting in 1 month. It's going to take a long time. It's going to take short but consistent changes in order to get to that. Now, I'm going to give 12 things that they can do to reduce their expenses and get to that 60% savings rate. And if they want to do it in 1 year, that means they have 12 months. And 12 months and 60%, that is going to be 5% per month. So they're going to need to save 5% of their money per month when they're starting from zero in order to get to 60%. And if we take 5% of their $50,000, that is $2,500 per year. We take that $2,500 per year, we divide it by 12 to figure out that 5% that they need to save every month, and that comes to about $208.33. So we're looking around $200 savings per month in order to get to that 60% savings rate. So that's just what we're going to do. I'm going to give you 12 ways that you could maybe apply to your life in order to increase your savings rate, but that this couple, this hypothetical couple, could do to their life to reduce about $200, maybe a little bit more, maybe a little bit less every month, until they get to that 60% savings rate by the end of the year. So all these 12 things is going to be basically what they're going to do in 1 month. And the very first one that I have is to cut the cable bill. If they have a cable bill and they cut that cable bill out, they could save a significant amount of money. Some people, they pay a lot of money for cable, some people they don't. So this could be more or less depending on, but I think this is extremely easy to do, to just cut your cable bill. First off, watching too much TV is not good for you, and it exposes you to endless amounts of forced advertisements. But beyond the point, I think that in month 1, we're going to start off a little bit easy and just cut the cable bill. If you still have a cable bill, imagine living without it. I think it'd be pretty easy, especially now that we have streaming services that offer endless amounts of entertainment for only about $10 to $15 per month. All right, number 2, in month 2, what I want this couple to do, and maybe for you to do, is to eliminate any kind of unused or rarely used memberships or subscriptions or just reoccurring charges. Now, there's a plethora of things that could be reoccurring charges to your credit card or to your bank account that you might not even know about, you might not even remember, or that you just keep on there because it might be too much of a hassle to get rid of it. Well, I'm telling you, you should get rid of it. And some good examples of this include your gym membership if you don't use it. If you do use it, then having a gym membership and working out is really good. Your Amazon Prime subscription, if you don't order from Amazon Prime all that often, you can still get free shipping on orders over a certain amount. I think it's like $35, which honestly isn't that much and isn't unrealistic. So you can still get free shipping on over that amount. Next one would be Costco membership. If you're unable to eat the large amount of quantities of food that you get from Costco before they go bad, then what's the point? Honestly, Costco's prices, they are good, but I've actually found much better prices at just regular grocery stores, discount grocery stores. Another one could be streaming services like I mentioned in the first one, Hulu, Netflix, Amazon Prime has their own. So if you have a bunch of different subscription services that are streaming services, do you really need all of them? Do you really need to be watching that much online content? YouTube, like you're watching right now, has plenty of awesome free content for you to watch, so consider that instead. At the same time, maybe just try to buckle down to just one. And beyond that, there are many other things that could be just reoccurring and charging. So you're going to have to look through your own bank statements and see what that is and just eliminate those. But I think that you could easily eliminate close to $200 or even more depending on what kind of charges you have reoccurring. All right, in month 3, we're going to reduce $200 very easily now by simply just bringing a lunch to work. So if our couple ate out for lunch every day, or even just one of them ate out for lunch every day, at $10 a day, 5 work days in a week, that's $50 in 1 week. And if there's 4 weeks in a month, then that's $200 perfectly right there that they could reduce. And if the other person is working and they do the same thing, then that's $400. So just simply by bringing a lunch to work, you can save a tremendous amount of money because eating out is extremely expensive. Even just fast food, it really does add up. Month number 4, we're going to be looking at food once again, and we are going to easily just reduce our grocery bill by $200. I find it very unusual and very strange that people come and they have $1,000 grocery bills per month. And I think it's a very accumulation of just wasting food, going to the grocery store way too often and buying things that they don't really need. I myself and my wife, we only spend about $250 to $300 per month on food, and I think that we eat pretty darn good and pretty darn healthy most of the time. So I think that you can reduce your grocery bill significantly, at least by $200, very easily by just doing some simple research and finding out how you can do it, and just going to the grocery store less often. I think you could easily reduce your grocery bill at least by $200 in month number 4. Month number 5, we are going to reduce our shopping and reduce our expenses simply by just eliminating it out of our budget. So $200 worth of shopping or clothing. So clothing is one thing that a lot of people spend a lot of money on when it's not very necessary. I bet you have plenty of clothing in your closet that you either don't use, seldom use, or that you simply just bought just because you were there. So shopping as a hobby is a very terrible hobby to have if you want to gain control of your financial life, and especially if you want to achieve financial independence. So you should definitely go shopping a lot less often. You should only shop with contentment. If you know what you want, and just go there to get what you want, not just shopping for fun, shopping for entertainment, and really just staying away from those areas where that kind of is commonplace, such as malls. Month number 6 has to do with directly reducing expenses again, and that is just to change the way that they think about entertainment. So entertainment is another expense that can be limited down very, very low, because entertainment can be expensive or entertainment can be very cheap. So there are so many things that you can do that are awesome hobbies, awesome for entertainment, that are free or very low cost. And I do a lot of things outdoors, so a lot of my things are free or low cost. You know, hiking, camping, and just going out to a lake, water, river, ocean, things like that. They're really low cost when you really think about it. And it provides me with hours of endless entertainment. And whatever it may be for you, or whatever it may be for our hypothetical couple, they need to rethink how they think about entertainment. Going to a bar as entertainment. That's a really bad form of entertainment if you want to be in control of your financial life. So going to the bar, you know, every Friday and buying alcoholic drinks for $5 to $10 each drink, you know, is not very good for your financial life. Just rethink how you think about entertainment and try to include more free or very low cost options in your entertainment budget. Number 7, we're going to start getting a little bit more intense on these savings. So it's not going to be just as easy, but I wanted these to be kind of unique. I didn't want them to just be basic, generic advice. So I'm trying to come at it with a very unique perspective, very frugal mindset, very financial independence oriented mindset. So number 7 is to actually reduce the amount of cars that your family uses. So most people have 2 cars. If you have more than that, then that's too many. But I'm talking about for this couple. If they have 2 cars, try reducing their car to just one. One person could use public transportation while the other one uses the car. They could switch off, things like that. It just depends. But cars are extremely expensive. They're more expensive than what we really think because there's a lot more hidden costs to owning a vehicle. There's things like, not only is there things like gas, there's also things like maintenance, there's also repairs, there's also the purchase price, and then if you didn't purchase it with cash, then there's interest expense, there's registration, there's insurance. There's so many things that go into just owning a car, even if you don't use it. Just owning a car is very expensive. So if you can reduce the amount of cars that your household has to just one, then you can save a significant amount of money, way more than $200. Number 8 is another one that's pretty extreme, and that is to just actually become a stay-at-home parent. So if this hypothetical couple had a child, if one of them stayed behind instead of working and became a stay-at-home parent, believe it or not, they could actually reduce a lot of their expenses. So not only is having less income make you more tax-friendly, so you'll actually pay less in taxes by simply having less income, but at the same time, you also save on things like daycare, which if your child needs to be taken care of while you're at work, daycare is a significant expense that you could just do yourself. So this is not something that everyone wants to do or something that everyone can do, but I think that being a stay-at-home parent could actually present a lot of opportunity for saving money. And there are many things that go into that, but it's just an idea. Number 9 is to simply reduce the interest that they pay. Now this one might be a little bit more easier, but it also has a lot more going into it. If you have a mortgage interest rate that is higher than the current market rate, reducing it by refinancing could be very significant, especially over time. It just depends on your situation. You could also refinance any kind of credit card debt. If you have credit card debt, you could pay it off using a loan that has a lower interest rate, and therefore automatically just save money, or spend less money rather, just because you don't have as high of an interest expense. So this can be pretty much anything. I just mentioned mortgage, credit card, student loans, auto loan, pretty much anything with interest debt, you could possibly refinance it and pay less in interest. So if you have a lot of debt, which I hope you do not, but if you do, you could refinance it and save a lot of money, even up to $200 or more per month, just by paying less interest every month. And number 10 goes one step further on that number 9, and that is just simply never pay interest again, except for maybe on your mortgage. Stop taking out auto loans. Just stop taking out any kind of debt and instead pay cash. Pay your way through everything using your own money instead of borrowed money, because that's just going to simply eliminate any extra expense that will come up, and you'll probably generate less expenses simply by pretending like you don't have the ability to borrow money. So if you have to only rely on spending your own money, you're probably going to be a lot more cautious about what you purchase. And when you do have to purchase a big ticket item such as a new car, it's probably going to be a less expensive car because you're spending your own cash instead of just borrowing it. There's really a big mental factor when it comes to this. So when you switch your mindset from borrow to pay by yourself, you're just going to approach everything so much more differently. And number 11 is move closer to work or downsize your home. So a lot of people will spend more money to live further away from work because maybe they get a bigger place or maybe they have a backyard wherever they are. They say that they can't afford to live close to work, but really they're making up that extra expense in their transportation costs. So driving a car is really expensive. Like I mentioned earlier, owning a car is expensive, well so is driving a car. In the 2019 tax year, the IRS lets businesses deduct 58 cents per mile. So that is what the IRS thinks it costs to pretty much drive 1 mile. So now apply that to your own mileage. If you drive 20 miles to work and you multiply that by 2, that's 40 miles round trip. You would multiply that by 58 cents, and that would be approximately how much it would cost you to drive to and from work in just one day. And then when you multiply that by 5, and then you multiply that by 52 weeks in a year or whatever, you can see how enormous the expense really is. And that 58 cents is supposed to pretty much be all-encompassing. It's supposed to encompass the depreciation, it's supposed to include insurance and registration and gas and maintenance and things like that. So your actual cost could be more or less, but it's a really good baseline to think about how expensive transportation is to and from your work. So if you actually live closer to work, even if your rent is more expensive or even if your mortgage might be a little bit more expensive, you actually have to think about the transportation expense as well if you were living further away. And at the same time, another one is downsizing. So simply by just moving into a smaller place, purchasing a smaller place, just living in a smaller house overall, that can save you a significant amount of money, not only on your mortgage or on your rent, but also on your utilities and taxes and so on, things like that. So housing is one that I included more towards the end because the significant expense that is included with housing. So we have one more, number 12. And for number 12, I want you to comment below and give me one thing that you think myself or maybe you could do to save $200 per month and get our savings rate to that 60%. And at the same time, please like the video. I would really appreciate that. It really helps me out. And I hope that you got something very valuable out of this. And if you want to get more valuable information, consider subscribing to the channel because I want to put out more information about personal finance and I want it to go straight to you. Thank you so much for watching. I'm Zach from OnCashflow.com and I'll see you next time.